At this point, we have already heard from two major stakeholders in the regulated Dutch market. But we have not yet discussed the market itself, specifically revenues, growth, market generalization, and other topics. Here to remedy that situation is Josh Hodgson, Chief Operating Officer at H2 Gambling Capital. Josh, please come to the stage. Welcome. I think we're all very interested in hearing more about the recent performance of the Dutch regulated online market, and I'm sure that you can enlighten us in this regard. Hey Josh, welcome. The clicker is here on the slides.
Thank you. Good morning, everyone. Unfortunately, unlike the two previous speakers, I'm not quite as talented, so I am going to lean on the slides here. So yep, as William has said, my name is Josh Hodgson, I'm the COO of H2 Gambling Capital, and today we're going to provide our analysis of the Dutch market. Now the name of my presentation last year was Make or Break, and this year, as you can see, it's at a crossroads. So I'm not sure how many more of these precarity themed titles I can come up with, but we'll see how the market progresses, and we'll have to get inventive for next year. For anyone who's seen myself or one of my colleagues present before, we cram a lot of data into the slides, so please don't try and keep up and take notes or anything. We're more than happy to share the slides afterwards, so please just drop your business card off with me. I'll send that over to you after the presentation. So I'm not a lawyer, so I'm going to just skip over that one and beg the forgiveness of Alan and the other legal people in the room. Sorry about that. So, in terms of H2, just quickly, who are we? So we're a data provider in the industry. We provide market data, forecasts, regulatory information, company information, market share, and player data from across the industry. So the majority of the industry's leading operators, suppliers, and regulators subscribe to our data service to access a complete and constantly updated view of the global gambling market. So to start, we're going to take a quick look at the global trends versus the European trends to see, on a macro perspective, where we're at in the industry. So as you can see from the chart here, the growth in the global gambling market compared to Europe, Europe is actually lagging behind. So with a forecast annual growth rate of 4.6% from 2025 to 2030, compared to 5.3% globally, we're seeing that Europe is now in a much more mature stage of its gambling market, whereas the growth in the global industry is being driven by expansion in a number of new market openings. Another factor to consider here as well is that there are significant regulatory headwinds affecting the European market across all jurisdictions. It's not just the Netherlands. So with those factors considered, we're expecting around 193 billion euros to be generated by 2030 in Europe, compared to 729 globally. However, where Europe is still significantly ahead is in the percentage of the market that is online. So Europe currently is at around 45% of the market that's totally online, whereas in the global market it's only around 30%. By 2030, we expect Europe to reach 51% as a base case, but there's significant chance that this will increase going forward. So if we take a look then closer into Europe itself and look at where that growth is coming from in terms of the land-based versus the online market, and you can see really where the growth is coming from directly as the online market continues to expand and accelerate its growth rate, whereas the land-based market is only just around fully recovered from the dip we see because of COVID, and the growth going forward is muted at only around 2% on a compound rate, compared to 7.5% per year for the online market. So looking closer into the online market now, we're going to look at the percentage of the market that is actually channeled onshore, and this is all of Europe. And what we're looking at here is GGR, so not player numbers, as I know there's different ways of measuring this, but what we're looking at here is GGR. So Essentially, we're seeing the onshore percentage as flat currently. However, our data only includes confirmed regulatory proposals. So any changes in the markets going forward from this point will significantly affect these numbers. So based on the trends that we're seeing in the monthly data, there is a high likelihood that these numbers will drop in the coming years across all markets, as the trend towards offshore operators does seem to be accelerating as onshore operators have a harder time competing. So if we look just at our forecasts over the previous 3 years when I've done this presentation in terms of the overall European channelization percentage, so we're looking at 2029 in terms of the actual percentage there. So in 2023, we expected this to be around 89%. 2024, this dropped to 83%, and 25, we're now expecting 81%. As I mentioned, there's significant chance that this will drop further going forward. So now we have an understanding of the sort of European macro industry. We're going to take a look closer at the Netherlands. So starting at a very high level, we're looking here at the percentage of the market from land-based and the online industry, and the GGR that's generated across those industries. The land-based market here is just regulated activity, whereas the online includes both the onshore and the offshore revenue. So we'll dive a little bit further into where the growth's coming from in terms of the online market in a minute. But there is growth going forward, even though we are expecting a pullback from 2024 to this year in 2025. So whilst the online market has grown at an average of 19.5% year on year over the past 10 years, we only expect it to grow at a compound annual growth rate of 5% going forward to 2030. However, I would potentially advise you to hold the champagne for now until we've had a chance to dive deeper into where that growth is coming from in terms of the licensed versus the unlicensed side of the market, because, some fairly sobering numbers. If we quickly look by product, so we're going to assess here how the market's split in terms of where people are playing it in terms of games. So gaming has always been the highest generator of revenue in the Netherlands, at 2.9 billion euros in 2025. We expect this to grow at 3.1% out to 3.4 billion in 2030. But the fastest growing segment, albeit the smallest, is betting at 3.8%, whereas lottery is losing share to betting, it seems, but is holding steady in terms of the amount that is generated in years to come and growing at around 2%. So, if we now take a look at the Dutch online market specifically, so starting with a zoomed out perspective of the onshore versus offshore online GGR trend on an annual basis. So this data refers to online betting and gaming market that is commercially licensed, so lottery isn't included within this, it is just betting and gaming. So if we start with the positives, the data shows that the onshore market in the Netherlands achieved a channelization rate of almost 70% by 2023, just over 2 years post-launch, and has generated 1.39 billion euros of GGR. This highlights an incredibly successful initial regulation of the market, which resulted in a material decrease in the size of the offshore market, in addition to onshore growth. This is exactly what we want to see in a market that is regulating. However, 2024 showed a marked change in this trajectory. The KSA reports shows that onshore GGR slowed significantly year on year, from 28% year on year in 2023 to just 6% in 2024, resulting in a revenue of 1.47 billion. Whilst our analysis suggests the offshore market jumped by 52% over the same period, from just over 0.6 billion euros to around 1 billion euros in just 1 year. Data for the first 3 months of this year, combined with a 41% decline in net win reported by FDJ in the market through Unibet, one of the biggest brands, suggests that the onshore market has deteriorated further from the latest official data reported by the KSA, which we have up until December 2024. Unfortunately, the outlook going forward suggests a continuation of this trend, and it could result in a 29% year-on-year drop in onshore GGR from 2024 to 25, with a 10% increase in offshore revenue, which would result in a channelization rate of 50% as a base case for the year. So now looking specifically at the channelization rate, again, we refer to channelization rate in terms of GGR, and under the current confirmed regulatory conditions, our expectation is for online channelization to continue to decline from this point. If the current trends continue to proceed as expected, the offshore market will overtake the onshore next year and continue to gain shares in the year to come. This is in marked contrast to our expectations at the time of my presentation last year, before the introduction of the increased tax rates and lower monthly deposit limits. Because at that point, our forecast outlined the potential for the Netherlands to achieve one of the highest channelization rates in Europe, around 90% by 2029, which would have made it a market leader. Now, our expectation for the same year is essentially for half that figure. So, before we deep dive into the data and trends behind the forecast, I'm going to provide some more context and information on our methodologies for the tracking of the onshore market. So this slide describes a very sort of stripped back model of the process that we undertake to actually get to the GGR data that we provide in terms of channelization numbers. So we use affiliate traffic data, web search data, offshore operator data, in terms of the amount of traffic going to different operators. And then we combine that with search volume data and a coefficient of spend to get to GGR for both the onshore, where we can use the KSA's actual numbers, and the offshore, where we put an estimate for the amount that is spent to get a channelization number. The methodology is similar to that used by the KSA and the new report, which Arjen and Willem both spoke about earlier. So we believe our findings have been encouragingly comparable across these three different methodologies, although they do share quite similar traits. So by tracking the data in this way, this allows us to look on a monthly basis at the expected online gambling revenue generated across both the licensed onshore market and the unlicensed offshore market. What this has shown us, tracking the data over the previous 2 years, that there was a significant increase in offshore revenue that started in the autumn of 2023, and a corresponding dramatic decline in the onshore revenue, which began in the summer of 2024. However, the data is skewed somewhat by the fact that we had the Euros, which took place in June and July last year, so we have naturally expected to see an increase and subsequent reduction in this the months after. Just speaking of the Euros, as an Englishman, I can only apologise for the result in the semi-finals, but I'm sure you're much happier than me to see the result in the final. I digress though. With the Euros considered, it appears the real sustained decline in onshore revenue began in the autumn of 2024, which coincides with the introduction of the mandatory monthly deposit limits and extended further with the introduction of the tax rate, the increase of the tax rate at the start of 2025. The data up to March this year shows that the onshore licensed market and the offshore unlicensed market is almost at parity. So this trend is even clearer when we look at the web traffic going to operators, licensed operators in isolation. So here we're looking purely at the percentage of traffic going to the operators hold a license within the market. This is prior to applying the offshore spend coefficient to translate to GGR. So the only manipulation of this data has been an adjustment for the duration of the site visit, which is done for both the onshore and offshore operators equally. So it doesn't bias the trend that we're seeing, which shows a consistent decline in the share of web traffic going to licensed operators. Now, as I mentioned before, our methods of tracking the onshore and offshore markets also include the ability to track the market share of different operators on a detailed basis for over 30 of the biggest operators. So here we're going to take a look at the trends for the previous few years and how they've impacted the market share of the biggest licensed operators in the market. This chart shows the estimated share of the top 5 licensed operators of the online market. And this is both onshore and offshore in terms of the total market size, with the top 5 operators licensed in the market. We're using a rolling 3-month average to filter out some of the noise from month-to-month fluctuations. So whilst it's clear that Unibet and BetCity are notable leaders in terms of share, The key takeaway here is that all the top licensed operators are losing share as a result of the players migrating offshore. Now, if we take a look only at the share of the licensed market, on an annual basis, we can see that the changes from 2023 to 2024 were subtle, but largely showed that the bigger operators lost a modest share percentage to smaller operators in the market. Whilst the market leader Unibet maintained its 24% share of GGR, 4 out of the next 5 biggest operators saw their share drop, with the exception of Bet365. Casino, LiveScoreBet, and 771 all saw modest gains, but the biggest increase in this was from the other 20 or so smaller operators captured in the other category, who collectively gained 5% share year on year and increased more than any other category. So now we're going to consider the potential reasons behind the changes that we're seeing in the data and see if we can figure out why it is changing the way it is. So if we start with the introduction of the deposit limits, we've already highlighted that there was a consistent increase in offshore GGR, and that's been apparent since the autumn of 2023. However, the corresponding decline in onshore revenue was quite closely related to October 2024, which is a correlation that the KSA has also drawn in their reports. So interestingly, the drop in web traffic to onshore operators was much more modest than we might expect. So from the chart I was showing before, it wasn't as if this fell off a cliff in October. In fact, it only dropped between October and December by around 1% in terms of the amount of visits going to offshore operators as opposed to onshore operators. So at first glance, this might seem fairly contradictory, because how can offshore GGR increase when we only get a small drop in onshore traffic? So it's our opinion that this occurrence highlights a very important factor in channelization. That is that a small number of very high spend players in a market are the ones most impacted by restrictions on spend and deposits, whilst the percentage of web traffic they make up is fairly low. So the percentage of GGR that they make up is disproportionately high to the number of players. Indeed, data from a range of regulators suggests that the top 5% of players in a market can account for over 60% of gross win. So losing this small number of players to an offshore market can result in a significant shift in GGR channelization rates. So if we take a look at the impact of the tax increases now from 30.5% to 34.2%, which took effect at the start of the year, this had a much more pronounced impact on the onshore web traffic, which showed a 4% drop in just 2 months. This indicates that the impact was felt much more in mass market players who are largely unaffected by changes in the deposit limits. So as the margins of operators are squeezed by higher tax rates, they're forced to reduce the return to player percentages, offer less attractive odds and bonuses, all of which just reduces the attractiveness of their product and leads a wider range of players to look elsewhere for the best odds available. Player survey data that we've collected in a range of markets clearly shows that better odds and pricing, as well as higher bonuses, are 2 of the biggest reasons that players across all spend ranges give for choosing unlicensed operators. With the additional tax burden coming next year, this dynamic will only worsen, and onshore operators will again have to reduce the attractiveness of their offers further as a result of this. So their ability to compete with offshore operators on pricing, odds, and bonuses will be virtually non-existent. So if we take a look quickly at the new regulatory policy proposals, so when we're considering the future of the Dutch market, we can't look past these. As I mentioned, because these aren't at a confirmed stage yet, these are not included within the data in the forecast that we've shown. However, to start with a positive, there's both good and bad in these proposals from our perspective. So to start with the positives, an expansion of the KSA's powers to target and combat unlicensed operators with a wider range of tools is absolutely essential to protect players. ISP blocking, payment blocking, and media strategies are all effective tools in targeting the illegal market. Of course, they're not completely effective, and there are ways to circumvent each of them. However, it makes it much harder for unlicensed operators to service Dutch players when these are in place. The more friction that a player experiences when trying to use an unlicensed operator, the less likely they are to pursue this and stay with that operator going forward. As there's little point in wagering your money when there is a bigger bet on that you may never get your winnings if your payment is blocked. However, we feel that the remaining proposals will fall short of their intended purpose of protecting players and instead only contribute to pushing players offshore. Essentially, the reduction in the attractiveness of onshore operators doesn't benefit the protection of players significantly and only means that they move elsewhere. So increasing the minimum age for high-risk games only increases the likelihood that these players will search for unlicensed operators who allow them to play these games with no question. So as Arjen mentioned before in his presentation, players as young as 15 and 16 are being seen as easily, are able to easily access offshore operators. So if we reduce the range and take those players out of the protected market, where there is no way that we can know the actual age, then they're at much higher risk than if we had a higher channelization rate onshore. So further restrictions on the onshore operators' advertising reduces players' understanding of who is and who is not a licensed operator. Advertising is one of the sole ways that a licensed operator can communicate that they hold a license to players. Offshore operators should not be able to do this, and it should be very clear to a player when they're going on a site who is licensed and who isn't licensed so they can make that decision. Finally, imposing overarching deposit limits will again just disproportionately impact the high-spend players who are already at a higher likelihood of seeking out unlicensed operators under the existing regulations. So, to conclude, the onshore market in the Netherlands is in decline, whilst the offshore market is growing significantly. From an incredibly positive start to the regulated market, in the first few years, the latest GGR data suggests that onshore channelization is at around 50%. A significant contributing factor in this shift has been the introduction of both the deposit limits for onshore operators and the increased taxation rates, both of which of these only penalise operators who have chosen to get licensed in the market. Even with increased powers to the KSA, further restrictions to the onshore market will drive onshore channelization levels even lower. This will be detrimental to the overarching aim of player protection, and it is already clear that high-value players in particular look to the offshore market for their gaming needs. The Dutch government's intention may be to reduce the appeal of online gambling overall, but in reality, this is disproportionately reducing the appeal of the legal, regulated online gambling operators who actually abide by the regulations. So they are in danger of pushing mass market players into the illegal market now too. I want to finish by making it clear that this problem does not only exist in the Netherlands. Markets across Europe are seeing similar increases in offshore gambling activity, and it's our opinion that a significant factor in this is the imposition of more and more restrictions on licensed operators, with little being done to actually combat the unlicensed market. When the attractiveness of the onshore market is reduced, players naturally look elsewhere, and when unlicensed alternatives are so easily available, their choice is a simple one. Sorry, thank you for listening. Okay.